Hi, Matt McAleer, President, Director of Private Wealth, Cumberland Advisors, January 31st, with our Vice Chairman and CIO, John Mousseau. Hey, quite a week. Came into Monday with some news out of China that they had a large learning model, DeepSeek, that could be operated and had been put together at a discount to what our models have in the AI space, a steep discount. A lot of that is conjecture, but regardless, as we know on these calls and managing money, headlines create market movement, and it's not the headline, it's what the stocks or bonds do with that headline. So we did see a fairly steep drawdown Monday morning into Monday afternoon. It's funny, ex-tech, so away from technology, markets were actually firm.
Right.
If you looked at the Dow Jones, finished up. So what does that mean to us in terms of managing portfolios? What we're trying to look for is in that sea of red, what flashes green first? Or what doesn't fall at the same velocity as the markets?
Right.
That's what we call relative strength. We talked about it last week. Sky, SKYY, a cloud computing ETF, had continued to catch our eye as exhibiting strong strength even in volatile markets. Well, you glanced up at Sky, it's down 2%, with a lot of tech down 5, 6, 7%. Nice holding. Would have loved to add to it there and didn't. Thought we might get a little better shot Tuesday, Wednesday. Stock ETF firmed up, traded very nicely. What did we do this week? We added to AIRR. That's the ETF that focuses on primarily mid-cap industrials. And it is tied to some extent to the grid build-out, not just data centers that we hear over and over, but straight grid build-out to run utilities to provide multiple demand centers, not just AI. So that got caught up a little bit in some of the sell-off. Firmed up, we added in our tactical account. Tactical trend, we added, brought that up. I like that trade. What did we do this month? We're at the end of the month. S&P is probably going to finish up, let's call it 3% for the month. What are some of the trades we did in this month that had some volatility? I'll tell you what I like best about this month were 2 sales we made. We always talk about what do we buy and this and that. If you recall back on January 17th, and we spoke to it on the video, we sold energy. We owned a ETF called XLE. It had traded up into an area that had met resistance multiple times. It did it quickly over a 2-3 week period. $94 sold to you.
Right.
One of those lucky ones. It's back down to 88. Saves our portfolio, our clients, 6, 7, 8% in the whole scheme of things.
Bank the game.
Yeah. The other sale we had that same day, that same week, Jan 17th, is we trimmed a little in GE Vernova.
Right.
GEV has had a rip and a half for us. We initially got into that stock, I don't know, 160, 165, traded up to 400. We just sold it down a bit, just trimmed it a bit. And we did it for only the reason that they were reporting earnings a week and a half ago, and I was a little nervous about some of the signs we had started to see about from their peers. Anyway, went higher, but then collapsed Monday down into the 320 area. Has rallied since. We're about a 360, 370. I like our original position. We'll stay there. Just a little bit of color around some of the trades we did this month. Moose, Bondland was busy.
Yes, it was. And just like stocks, big changes. Yields down this week. And we see this time and time again. We've talked about it. Whenever you get a surprise, whether it's a financial surprise like the bank stocks back in March of 23, or a political foreign relations surprise like the Hamas-Israel conflict later on in 23, later on 24, excuse me, 23. And then look at a technology surprise like we had with DeepSeek this week. The reaction is always the same. people run to the safety of treasuries because of the uncertainty that was presented by the event. This week was no different. Yields down across the board. The 10-year treasury was down 9 basis points. 5 years down 9, 2 years down 6, so the 10 years at a 4.52 as we sit here. And muni yields actually down this week as well. 10-year muni AAA, 367 down to 297, down 10 basis points. That was really in concert with treasuries, and also the fact that supply so far this year is down and will be continue to be down. So, are we surprised by this? No, this happens every time you have a surprise. The other part, though, is it's a continuation of something we've talked about here, and that was the run-up in yields was kind of the fear of Trump, and that we thought that once Trump was in, it would be less fearful than the anxiety of going into it. And so far, that's proven true, because that bond yield was about a 480 just a few days before he took office, and it's down closing in on a 450 now. This week, some good news that was a follow-up to the good inflation news of a couple weeks ago. We had the PCE data today. That was right on schedule at 0.3, and combine that with the fact that the Federal Reserve kept short rates unchanged this week, but their language was clearly a little different than it was in December, when they basically said, hey, we're cutting rates 25 basis points, but our expectations are elevated on inflation and growth. He soft-sold it and said, inflation has calmed down a little bit and it is in the direction that we want. He's not promising you a rate cut, but he was a lot less confusing than in the past, and the market's like that as well.
Yeah. And again, we've spoken the last 2 or 3 or 4 weeks. It appears bond markets are kind of settling into a range.
Right.
Maybe on the short end, and being the axe in the bond area, you can speak to this with more clarity than myself. But I think on the short end, 12 months out, a 350, a 375, that's not a deal killer for multiple asset classes.
No, not at all. And the other part too is it's going to be a continuation of looking how the economy is doing. We'll have the jobs, we'll have the January jobs number next week. That'll be telling for us. And it's not only the direction you're heading, but whether you get a surprise on the number itself. And listen, so far, since last fall, when you did get some surprises, the surprises have been on the positive side for bonds lately.
Yeah. And Moose, you have some news?
Yes. This is our last broadcast from this location. Next week we will be at a new location. Cumberland is moving just down the street here in Sarasota to a new building. It'll be good for the firm. The layout will be much better for us. We're looking forward to it. We've been spending the last couple of days packing stuff up, and we'll be moving this weekend. So when we see you next week, we'll be down the street at the Kane building in Sarasota and broadcasting from there.
Thank you, John. Next week, what I'd like to see, a little strength in Microsoft. That was disappointing this week.
Yeah, and I'd like to see a good number on the jobs number next week that doesn't surprise the heck out of everyone.
You got it. We'll leave you with that. See you next week from our new location down the street. Enjoy the weekend.